Hello traders, and welcome to the Forex Boat educational session. In this video we will be talking about the GBP USD, or in other words the cable. Specifically, we will be talking about why cable is so popular amongst the traders. Is it really a good choice to trade cable? What is the best time frame? What is the best time to trade pound dollar? And how to identify trend along with the support and resistance levels. But before we get started, don't forget to subscribe to our channel. What makes cable such a popular currency pair? Of course, this is the volatility that this pair provides, because if we compare it to the euro versus dollar, the volatility is much higher, thus the opportunities are bigger. While the euro dollar could move 10 pips, pound dollar could move 30 pips. So this huge volatility or increased volatility is what makes it attractive for traders. Besides, it offers a very low spread, sometimes similar even to the euro dollar. Not as low, but usually it more or less the same. It could be as low as 1 pip or lower at some brokers, but most of the time is 2 or 3 pips. Still, it's very low if we compare it to many other top crosses. But as it's so popular because the pound economy and United States economy are amongst the top economies in the world, it's actually subject to manipulation, of course, as the same as for the euro dollar. And this is why it makes it riskier than other currency pairs to trade. And perhaps for this reason, for the novice trader, it is not the best choice to start with the pound dollar because of the highly manipulative nature of this currency pair. But once you get some experience, you understand the behavior of the cable, how it moves during certain times, what is the volatility, what needs driving this currency pair, then of course you can trade it with profit. So yeah, for the novice trader, it's better to stick to something else rather than the pound dollar and only then move to this currency pair. Once you get to know this currency pair, you may wonder when is the best to trade this pair and which time frame to choose for trading. It is a hard question because it depends on the style you want to trade, whether you're a swing trader, intraday trader, and depends on your availability to trade. If you can't stick around by the monitor all day or you can only dedicate an hour per day, it also will depend on that. But generally speaking, the volatility comes to the cable around 8 AM GMT when the European session gets opened. And it lasts about till 16 GMT. So that's the time when the most volatility is presented by the cable. So obviously this would be the best time to trade it because you want to catch these opportunities, these price movements. Whether you should stick to the lower time frames or higher, well, it is always better to use multiple time frames. You need to see the price direction. What is the big trend and follow this trend on the lower time frames. This is the most common approach and this approach works. Now, if we look at the cable right now, what we can see is of course the trend. You can easily identify the trend on the daily time frame. Only then you need to decide whether to buy or sell. In our case, we see higher highs and higher lows. This is one of the easiest way to identify the trend where the price is fading to break below the previous low and produces a new higher high. At this stage, we would need to see the pullback and look for the buying opportunities as long as price remains above this low. Another easy way to follow the trend is to use moving averages. You can see I have added here 4 moving averages, but you can use different ones. In my case, these are 50 simple and exponential and 200 simple and exponential moving averages. What I generally look for is when the price above all moving averages. This gives me the sense of a strong trend. Like what we have right now is price above 250 moving averages. So this is clearly a very bullish trend for the pound dollar, and in this scenario I would certainly look for the buying opportunities. While we identified the trend on the daily time frame, we can move to lower time frames, for example 1 hour chart, and also look at the moving averages. When we see that the price is above all moving averages, for example right there, it broke to the upside, it was above all moving averages. It happened also right there. So these are the two periods when we saw price was above the moving averages, and here. Now we would look for opportunities up until the point where the price remains above either this area or this area, because if it gets lower, it means we're not above all moving averages. Same would apply here. We would look for opportunities as long as the price above this area. So these are the lines where we would look for the buying opportunities as long as price is above our support areas. Here is the same, we would be looking the opportunities until the price is above this area. So going back to 1 hour time frame and just moving back, what we see here, we would not find a good opportunity because there was no strong corrective move to the downside. We need some pullbacks. 61.8 Fibonacci retracement level is a good indication. Like if we apply fibs to this correction, obviously if we reach 61.8, this would be below our key support. Moving on, applying it to this wave, right there would be no opportunity for us, but we could use the last wave. Also, there are multiple Fibonacci levels that you could use and see. So generally 61.8 is a good price to enter, but 38.2 and 50 are also the levels that should be watched. So right there, if we zoom it, you can see there was a clean bounce of these fibs, which is 50%, and we had the rejection of the moving average as well on the 1 hour time frame. So this is the opportunity that you could use. Now if we move further, yet again what we see is the correction to the downside, but here the correction was 38.2, so yet another rejection of the fibs. But the best is to look when you have the rejection of the Fibonacci retracement level as well as moving averages, either 200 or 50, because this is the lower time frame, and this opportunity could be actually very good in terms of the buying for long term on the pound. And for example, when we see that confirmation, and the confirmation is the new higher high. Previous wave started right there, and we had to see this break above the previously made high. So this could have been the confirmation, then wait for a pullback towards 50 moving averages, and around this price, for example, we could have this buying opportunity. Now let's move to the daily time frame. As easy as that, we could spot where to buy or sell pound dollar. Same applies of course to other currency pairs, but you should be more careful with the pound because it's more volatile and you need to make calculations as to what should be your risk, because if you trade it same way as the euro dollar, you would be risking much more than if you would trade the euro dollar itself. So that would have been our buy trade right there, and now we need to find how far it can go. Of course, for that we could be using previous levels of support resistance, we could be using the rejection of the moving average right there. There is important resistance area. As we can see, there was a break below the 200 moving averages, there was a cross of the 50 and 200 moving averages. So this is clearly a very important area of resistance, and this is where the price could be getting, and potentially 200 pips to the upside. Another interesting way to look at the pound is to look at the correlated currency pairs. Now let's remove all drawings, because many times while the cable is showing the bullish trend, other correlated pairs are showing a bearish trend. So we need to make sure that this is either pound is driving the pair or the dollar. And in our case, let's just look into pound Swiss franc. On the pound Swiss franc we have similar picture. So this is a very bullish case because it's above all moving averages. Let's go to the pound yen. The same, we are above all moving averages, very bullish trend. Let's go to the pound Australian dollar. On the pound Australian dollar, not so bullish, probably because the Australian dollar is also very strong. So here is no go. And finally, let's have a look at the pound versus Canadian dollar. On the pound Canadian, yet again, we see a very bullish trend above all moving averages. And in fact, if you missed the pound dollar and you know that there is a bullish trend for the pound, you could be trading the pound versus the Canadian dollar. Like right there, we have this setup where the price corrected down and it's still above the moving averages. So let's move on the forward chart and see what's happening. On the forward time frame, we have the rejection of 200 exponential moving average. This is one of the signs that the price is about to start getting bullish. But for that, we need to produce a new higher high. And of course, this high has to be broken. On the other hand, we could be looking for these opportunities when the price is right at the bottom, because it will provide a good risk to reward ratio. But as a confirmation, not only the higher high has to be produced, but we can use the simple trend line and see if there was a breakout. For example, here there was no confirmed breakout, and I would need to see if break above this high in order to confirm the breakout above the trend line and then have my buying opportunity. And besides, we can also add a Fibonacci retracement level and see what's happening. So based on Fibonacci, we had 38.2 fips, not cleanly rejected. We could probably use another fips just to the overall trend. Same, no rejection of the fips. And yet another wave, no clean rejection. So final wave was this one. Maybe we could use multiple fips and see where the rejection was, because it's hard to spot which wave you should generally use for this kind of rejections. So use multiple fips, use multiple time frames, use multiple currency pairs to confirm the validity of the pound dollar trend. And you shouldn't always trade the pound dollar, because there are many correlated currency pairs that are lagging and you could capture these opportunities. Besides, pound is highly manipulated and you should try trading other crosses like pound New Zealand, pound Australian, and so on. Try to see multiple buying signals on multiple pound pairs. And also, when you trade pound dollar, we just looked at the pound pairs, but we still need to see the dollar pairs to give us the same confirmation. Like if we go to the euro dollar and move to the daily time frame, we can also spot the bullish trend, meaning that the dollar could be still weak. Moving to the dollar yen, same, it's a bearish trend on the dollar yen. And let's move now to dollar Swiss franc, same bearish trend. So this is how you could approach trading the pound. And now you know how to spot the trend. You know that you can trade correlated currency pairs that are lagging. For example, in our case, it was a pound versus Canadian dollar. Same, providing the buying opportunities. Maybe not to focus on a single pair, but use multiple pairs correlated to the pound dollar, understanding the direction and following the direction on the low time frames. I think the best is to use daily time frame to capture the overall trend, then look for the opportunity on the hourly chart, and then perhaps trade when the most traded volume is given, started from the 8 a.m. GMT. This is where you want to take your opportunity to maximize the risk to reward ratio. So that's it, guys. Hope you enjoyed this lesson. Don't forget to subscribe to our channel and smash that like button to see more similar videos on other currency pairs as well as different topics. Thank you all for watching, and we will be back with new video very soon.